Hi everyone, welcome back to Saheb Academy. Today in this 8th video of issue of debentures chapter, we are going to discuss about writing off discount or loss on issue of debentures, and we are going to solve two problems on this. Okay, now let me tell you so far what we have done in the previous 7 videos which you have to watch. I will put the links in the description below. See here. In the previous 7 videos, we have completely covered issue of debentures for cash. Yeah, 6 different cases, 6 problems, and then we have understood oversubscription also pro rata, and then we have discussed about collateral securities. We have done a conceptual example over there, and then we moved on to this for consideration other than cash. Here also we have solved 2 conceptual examples, and then we have solved problems in a separate video. And then after that we have covered interest on debentures as well, just in the previous video. And now we are here to understand the last topic of this chapter and solve 2 problems on this. Okay, writing of discount or loss on issue of debentures. Let's understand this. Now see here, we have the concept of writing off discount or loss on issue of debentures. It's really simple and straightforward. The first thing that I have to tell you is the meaning of writing off. Do you know what is the meaning of writing off? It means to cancel something from our accounting books, to remove it. Okay, that's what writing off means. And discount or loss on issue of debentures, you already know that. Yeah, I have explained. Discount happens when we issue the debentures at discount. Yeah, face value 100 debenture we have issued it at 80. Then we have 20 rupees discount. If we have issued at 90, then we have 10 rupee discount, right? That's called discount on issue of debenture. Loss on issue of debenture is what? It's a loss that happens when we will redeem the debentures at premium. You all know, when we issue the debentures, at the same time only we discuss the repayment terms as well, isn't it? Because it's a loan. When you take money from one of your friend or someone, then immediately that person asks you, when are you going to repay it back? Similarly, here also the same case we have. When we take money from the public, from the debenture holder, they ask us how much and when we are going to get back the money, right? So that's the thing. Fine. So if the debentures are issued at discount, then we'll have discount on issue of debenture. If we are going to redeem at premium, then we'll have loss on issue of debenture, isn't it? Yeah, I have told you in the beginning, in the first video itself, we'll have 6 different ways in which we can issue debentures, right? In beginning only I have covered everything, right? I didn't separate first the simple issue and then considering the terms of redemption. No, I have combined everything in the first video only. I told you debentures can be issued at par, at premium, at discount. At the same time, the repayment terms needs to be discussed, right? So we'll have to consider not just 3 cases, just issue simple cases. No, 6 different cases. Issued at par, redeemable at par, issued at par, redeemable at premium, and then issued at premium, redeemable at par, at premium, issued at discount, redeemable at par, issued at discount, redeemable at premium, isn't it? Yes. So now because of this, understand in which cases will you have these 2 things. You have to understand that. In the second case, you will have it. Why? Because see, face value is at 100 and you are redeeming at 120, 20 rupees extra you are paying. So that's called what? That's called loss on issue of debenture. You are redeeming at premium, right? So in all the cases where you are redeeming at premium, yeah, here in case 4 as well as in case 6, what will happen? Here 20 rupees extra you are paying. Here also 20 rupees extra you are paying. So because of this, what will happen? Because of this, there will be loss on issue of debenture. And always remember, we compare this extra value with the face value, okay? Not with the issue price. These are issue prices. We compare it with the face value. All right, understood. And then in case 5 also, you will have discount, isn't it? You are issuing a discount. So because of this, there will be what? There will be discount on issue of debenture. Is that clear? So this is the thing. These are the cases when you will have, either discount on issue of debenture or loss on issue of debenture. Fine. So now I told you, what do we do with this? Yeah, let's just take this case 6 example. In case 6 example, you can see face value is 100, IP is 90, redemption value is 120, right? Issued at discount and redeemable at premium. I told you first we'll receive the money, bank account to debenture application, 9090, yes. And then what we do is, we have to allot the debenture. So when we allot the debenture, we pass the entry, debenture application account is finished. Yeah, we make an equal debit, and then we transfer the face value, just face value, to the percentage debentures account, 100. And then we record the discount as well as the premium that we are going to pay extra on redemption. The discount, how much discount did we give? Face value is 100, we issued at 90, 10 rupee discount we give. Discount on issue of debenture 10. This is a capital loss. Okay, so losses are always debited, you know that, nominal account rule. Or if you're going with the modern rules, then loss is an invisible expense. When expense increases, we debit that. Okay, and then as I said, redemption value is 120. Redemption is at premium, 120. So 20 rupees extra we are going to pay. So that 20 will be recorded over here. Loss on issue of debenture to premium on redemption of debenture, right? 2020, isn't it? Or it can also happen, we can combine these two, entries together, can be combined as just, loss on issue of debenture rupees 30. That can also happen. Now understand, this has to be capitalized. This 10 rupees and 20 rupees, these are considered as capital loss and it is capitalized. Okay, it is taken to the balance sheet and then it will be amortized, like how we charge the depreciation on fixed asset, tangible fixed asset. Similarly here, you have to amortize this. Slowly you have to take this to profit and loss. You have to write it off. Do you understand? What is depreciation? Depreciation is writing off the asset slowly, right, over the useful life of the asset. Similarly here, what we do is we write off this loss over the life of debentures. If these debentures have been issued for 5 years, then over the period of 5 years, we will write off this loss. What does that mean? It means you have to take this 30 rupees slowly in the period of 5 years to profit and loss account year by year. That's the meaning. Okay, that's how it is written off. But how the calculation will happen and all, we'll discuss. Don't worry, the basic idea you have got right now. Okay, first this will be recorded, okay, by debiting it, and then you will have to credit this to cancel. Okay, so what kind of journal entry will you pass? You will pass the journal entry like this. See here, statement of profit and loss account debit to discount or loss on issue of debenture account. Okay, whatever the calculation is, that calculation you will do, and you will come to know in this current year how much I have to write off. That amount you will take over here. Is it clear? This is what you have to do. Now this is for CA Foundation students. CA Foundation students, according to the ICAI material, they are just using statement of profit and loss. So you will not use anything else. Why not? In practical life, you can use capital reserve, you can use securities premium, and then you can use general reserve, and then you can use profit and loss. Yeah. So in practical life, you can use all these things. But the ICAI module follows just statement of profit and loss. So to keep the uniformity, okay, in the answers when you will write the exam, that's why you have to use statement of profit and loss account only. Is that clear? Simple. Fine. So what is happening over here in this journal entry? We do not understand anything. See, it's really simple. First, what did you do? At the time of issue, you debited these guys, right? Discount and loss on issue of debenture. You debited them. 10 rupees loss has happened, 20 rupees loss has happened. You recorded them. And then you did some calculation, how much you have to write off in the current year. You came to know, let's just say 10 rupees you have to write off in this current year. So you will pass this entry, statement of profit and loss account, debit 10 rupees to discount or loss on issue of debenture account, 10 rupees. This is what you will do. Is it clear? Simple. So what is happening over here is you are taking this, expense to profit and loss. Like for example, if you have paid rent, what's the entry? Rent account debit to cash. Yeah, rent is paid. So now rent is an expense. What will happen to that rent account? It's a nominal account. You take it to profit and loss. So statement of profit and loss account to rent. That's what you do. You close all the expense and incomes account at the year end. Similarly here also it's like that only. Okay, we are taking the loss of current year to the statement of profit and loss. By the calculation we have understood 10 rupees the current year loss. So So that much we have taken to profit and loss. Is it clear? Simple and straightforward. This is what you have to do. But now understand, if you're a class 12 student or a BCom student, yeah, then what you have to do, you will not do like this. Okay, for class 12 and BCom student, it's really simple. Okay, what you have to do, no calculation, nothing, directly entire 30 rupees, 10 plus 20, no calculation, nothing. Okay, no straight line method, sum of years digit method, no, just 10 plus 20, it's 30. Okay, fine, we will take it straight to, we'll just completely write it off. See here, securities premium account, yeah, you will have to use securities premium account if it exists, and then the balance statement of profit and loss account. Fine, let's just say, for example, securities premium is there in the question of 10 rupees. So securities premium account, debit 10 rupees. Statement of profit and loss account, the balance you will take 20 rupees, because the total discount and loss on issue of debenture is rupees 30, isn't it? So that 30 you need to write off out of securities premium and statement of profit and loss. Is it clear? So 10 you have used securities premium, it's finished. Then the remaining you have to just transfer to statement of profit and loss, 20. So here, to discount or loss on issue of debenture, 30. Is that clear? This is what you have to do. Now what's the logic? Why is this different for class 12 student and for CA foundation students? Understand, okay, that uniformity thing I explained you, just using statement of profit and loss, that's because of the ICAI module. Now the difference between this, here we are doing some calculation and writing off over the life of the debentures, and here entirely at once only we are just finishing off the entire discount or loss on issue of debenture. The difference is because, see, understand, this thing is governed by AS 16, borrowing cost standard. Okay, so in borrowing cost we have two things. We have borrowing cost, which will be capitalized and then amortized, and then we have other borrowing cost, which will be entirely treated as an expense, directly taken entirely to statement of profit and loss. It will not be capitalized. So here we assume in class 12 and BCom, to keep things simple, they have taken an assumption that all the discount or loss on issue of debenture will be treated as what, other borrowing cost. They're assuming it like that. Okay, it fits into this category, other borrowing cost. So that is why the rule is, if it's other borrowing cost, take entirely to statement of profit and loss. Here entire amount is written off in the year in which it is incurred, because it is assumed to be other borrowing cost, not borrowing cost, other borrowing cost. But here we are assuming it is borrowing cost. Is that clear? That's the difference. Fine. So for class 12 and BCom student, it becomes very simple. You just pass this entry, your solution is done. Okay, is that clear? Okay, fine. But for the CA foundation students, you can't directly finish off all the whole amount. Okay, you can't do that. What you have to do, you have to do the calculation. So let's understand now what calculation we have to do. Okay, so you understood the journal entry, right? Okay, now let's just go to the calculation. Now see here, we have the concept on how to do the calculation of the amount of discount or loss on issue of debenture to be written off in a particular year. Okay, we understood that we have to capitalize and record the discount or loss on issue of debenture, right? And then slowly take it to profit and loss, yeah, over the life of the debentures. So how to do this calculation? That's what we are understanding over here. Let me tell you, there are two scenarios over here, scenario 1, scenario 2. Let's just focus over here first. Here what happens is, we issue the debentures and then a period passes and then we redeem the debentures. Only 2 points: issue, redeem. Okay, that's all. This is called as first scenario. Debentures are redeemable after a certain period of time, say at the end of 5 years. We have issued in the current year, let's just say for example, and then in 2029, after 5 years, we have redeemed it. Okay, so just 2 points. This is called as scenario 1. Okay, in this case, what's happening is, understand this properly. Okay, what is happening? We have taken 10 lakh from the public, right? And this 10 lakh face value is with us for the entire 5 years. That 10 lakh money is with us, with the company, for the entire 5 years. So we have taken the benefit of this 10 lakh for the entire 5 years, isn't it? Yes. And then we gave it back at the end of 5 years, right? That's what happened. So this discount or loss on issue of debenture which has happened, this has happened, you know, at the time of issue. You can say we have recorded at the time of issue. Yeah, discount happened at the time of issue. Loss on issue of debenture will happen in future, but we have recorded over here only. Yes, and it is directly connected with the issue of debenture. Do you agree? Yes, it is directly connected with the debenture only because it happened on issue of debenture. Yes, fine. So now if we are getting the benefit from the loan, this debenture loan, for the entire 5 years, so that means we have to distribute this discount or loss also in these 5 years. Is it logical? Yes, it's logical. So how are we going to distribute it? If we have taken the benefit of this 10 lakh for the entire period, all 5 years, then we will distribute this loss, this discount and loss, yeah, also equally in these 5 years, equally. For example, if discount or loss is, let's just say 40,000, then we'll divide it by 5 simply, divided by 5. So 8,000 every year to statement of profit and loss. Is that clear? So this is what you will do. Okay, you will take this 8,000, yeah, slowly every year for the entire 5 years. So like this, what will happen in the balance sheet, this 40,000 will, you know, keep on reducing, right? That's what will happen. Slowly you will amortize it. Is that clear? You will reduce it. See, in this scenario, the total amount of discount should be written off equally throughout the life of debentures. Why equally? What's the logic? Logic I have explained you. We had that 10 lakh for the entire period. We have taken the benefit from that 10 lakh equally throughout the years. So that is why we say this discount or loss also happened because of that. Yes, because of issue of debenture. So that also let's distribute equally only. Okay, 5 years in this example. All right. So this is called as straight line method. Yeah, it's straight lining, or it's also known as in some books fixed or equal installment method. Okay, all right. Now let's just solve one problem on this. It's really simple. See here, let me just show you. Now see here, we have our 13th problem of our series, and the question is from ICAI study material illustration 11. Let's just read this question. HDC Limited issues 1,12% debentures of rupees 100 each. That's the face value. What's the total face value? 1 lakh debentures we have issued of 100. So just multiply that. We'll get the total face value. 1 lakh into 100, that's equal to 1 lakh into 100, that's equal to 1 crore. 7 zeros, right? Yes, that's the face value, total face value. Add rupees 94. You see, it have been issued at discount. It have been issued at discount. How much discount? 94 they are saying. So 100 minus 94, that's 6 rupees. 6 rupees discount they have given. Okay, on 4th January 2022. All right. Under the terms of issue, the debentures are redeemable at the end of 5 years. Okay, now we are assuming the redemption will happen at, what do you say, at par only, because they are not saying premium or anything, right? Okay, and it will happen after 5 years from the date of time of the issue. Calculate the amount of discount to be written off in each of the 5 years. Yes, that's what we have to calculate. How much amount to write off in a particular year, that's what we have to calculate, right? Yes. So see, it's really simple. Understand here what happened. We issued in 2022 as the question said, and redemption will happen at the end of 5 years. At the end of 5 years. So just 2 points are there. Issue, redemption, over. That's the story. So whenever we have such a case, we say scenario 1, because in scenario 1 we have only 2 points, issue and redemption. In this case, what we do, we distribute the discount equally throughout the life of debentures. Okay, that's what we do. So let's see how it will happen. First, what we have to do now, first we have to calculate the total discount. What's the total discount amount? Really simple. 6 rupees discount is there per debenture. So just multiply that with the total number of debentures. We'll get the total amount of discount. Discount on issue of debenture is equal to 1 lakh into rupees 6. Total number of debentures into discount per debenture, that's equal to 6 lakh in total. This is the amount we have to write off over the period of 5 years, isn't it? Yes, you all know this. Now how it will be presented and all the calculation, it's really simple. See here, we'll just make this table. See here, year, debenture outstanding, ratio in which discount to be written off, and then amount of discount to be written off. You already know all these things. It's really simple. You know, in straight line method we just distribute equally, so you already know this. See, understand, year end means what? At the end of the year, at the end of the first year, second year, third year, fourth year, fifth year, right? 1 2 3 4 5 also you can write, or you know, 2022, 23, 24, 25, 26, right? 5 years you have to write. Okay, what's the debenture outstanding? Debenture outstanding means the face value of the debentures that exist on our balance sheet. So tell me, how much face value of debentures are existing on our balance sheet? You will say it's really simple, sir. We already know 1 lakh into 100, 1 crore. 1 crore face value of debentures are there in our balance sheet. In 2022 also, 23 also, 24 also, in 25 also, and in 26 also. In 27 it's no longer there because we have done the redemption, isn't it? Yes. So in all the 5 years, 1 crore face value of debentures were there, isn't it? Yes. Okay, because 1 crore money was with us, right? Not exactly 1 crore because it has been issued at discount, but that doesn't matter because here the calculation is based on face value. Is that clear? Okay, fine. So face value we have taken. All right. So now what we have to do? Now you all know equal distribution, isn't it? Because we have taken the benefit of this 1 crore for, you know, all the 5 years equally. So that's why this discount also needs to be distributed equally only, because that's how we have derived the benefit. Okay, fine, understood. So how are we going to take the ratio over here? See, 5 years are there. So 1 by 5, 1 by 5, 1 by 5, 1 by 5, 1 by 5. Is it clear? That's how you will take the ratio. Yeah, 1 is to 1 is to 1 is to 1 is to 1. Is it clear? Simple. Equally you have to distribute. What equally you have to distribute? You have to distribute this 6 lakh equally, isn't it? This is the discount which you have to write off. Okay, so just do the calculation. 6 lakh into 1 by 5. 6 lakh into 1 divided by 5, that's equal to 1,20,000. Basically what they have done, 6 lakh divided by 5, right? 5 years are there, divided by 5, 120. 120 will be taken to profit and loss every year in 2022, 23, 24, 25, 26. Do you understand this? It's really simple. Is it clear? Yeah. So understand, at the end of 2022, what happened? At the end of 2022, see here, understand, 1,20,000 was taken to profit and loss. Yeah, it was treated as an expense. It was written off. Yeah, just in 2022 I'm talking about, just in 2022. Okay, now in 2022 only, you know, in the next year, in the next 12 months, I'm going to write off, yeah, 1,20,000 in 2022 only, you know this, right? So the next thing what you have to do, understand, there are three parts of the discount or loss on issue of debenture. First part is what you have taken to the profit and loss in the current year, 1,20,000. Okay, written off in the current year, statement of profit and loss. To be written off in the next 12 months, this will be shown in the balance sheet under other current assets. Under other current asset, which one? This one, 1,20,000. What you are going to write off in the next 12 months, okay, from the balance sheet date. Is that clear? Okay, and then balance, whatever that is left. What does that mean? It means this balance. See, 120, 120, 120. Yeah, 120 plus 120 plus 120, that's equal to 3,60,000. The remaining 3,60,000, the balance, that will be shown, see here, that will be shown under other non-current asset in balance sheet. Balance to be written off thereafter this next 12 months. Is that clear? That 3,60,000 will be shown under where? Other non-current asset in the balance sheet. Is it clear? Simple and straightforward. Okay, this is the presentation that you have to do in financial statement regarding this. Is it clear? Yes, you understood this. So now let's just move on to the second scenario. You are done with the first scenario. Now see here, we have the concept of second scenario. It's really simple and straightforward. This is a situation when debentures are redeemable at different dates. Okay, if you compare this with the first scenario, in the first scenario what happened, we issued the debentures and then we redeemed the debentures at once in a single point of time, right? That's what happened. But here it's not like that. Here redemption is happening at various points in the period itself. Let's just see. For example, let's just say we have issued debentures of 10 lakh, okay, and then what happened was at the year end, at the first year end, we redeemed 2 lakh face value of debentures. We repaid back, okay. So how much value of debenture is there in our balance sheet now at the end of first year? 8 lakh. 8 lakh debenture is outstanding. In the second year, again at the end, we have redeemed, let's just say 2 lakh. How much is outstanding? 6 lakh debenture is outstanding of face value, isn't it? So this is what happened every year. At the end of year 3, 2 lakh we redeem, 4 lakh outstanding, isn't it? 6 minus 2, 4. Then again in the year 4, 2 lakh we redeem, so 4 lakh minus 2 lakh, that's 2 lakh outstanding. And then in the year 5, we have again redeemed 2 lakh, so nothing was left. Everything has been redeemed. All the 10 lakh which we took from the public, okay, not exactly 10 lakh, maybe we have issued a discount. So all the debentures of face value 10 lakh has been repaid back, has been redeemed. Yeah, that's what has happened. So now how are we going to distribute the amount of discount or loss over the life of debentures? That's the question. That's the main question. Here we saw in the scenario 1 that for the entire period we had debentures of 10 lakh. We have taken the benefit of them equally over the period of 5 years. That's what we assumed, and we distributed this also equally. If 5 years are there, 1 by 5. If 10 years are there, 1 by 10. If 6 years are there, 1 by 6. That's what we did. Equal distribution. Simple. Every year the same amount will go in statement of profit and loss. Yeah, that's how we'll write off the discount or loss in the scenario 1. But here how we are going to do it? How? You have to just see the benefit, how we have taken the benefit. That's the main part over here. Okay, understand how do we take the benefit? What's the meaning of this? See, we have taken the benefit over here in scenario 1 with that 10 lakh, isn't it? That 10 lakh was with us for the entire period, isn't it? Yes, it was with us for the entire period. Equal benefit we have taken every year in this first scenario. Here, let's just see that. In the first year, we had face value of how much? 10 lakh. Yeah, we had debentures of face value 10 lakh in the first year. In the second year, what happened? In the second year, we only had 8 lakh face value of debenture. Do you understand this? In the first year, only 10 lakh was there. Then at the end, at 31st December or 31st March, we did the redemption. And in the next year, only benefit was of only 8 lakh. In the third year, benefit was only of 6 lakh, isn't it? Because 2 lakh we have repaid. So in the third year, only we have 6 lakh debentures, isn't it? In the fourth year, we had only 4 lakh face value of debentures. And then in the fifth year, we had only 2 lakh face value of debentures. We have taken only 2 lakh face value of debentures benefit. Is that clear? This is the logic over here. Based on this logic only, we will distribute the discount or loss on issue of debentures. See here, understand, it's really simple. In this scenario, the total amount of discount should be written off in the ratio of benefit derived from debenture loan in any particular year. Here we said every year, same benefit has been derived. So 1:1:1 we did, right? But here it's not like that. Here it's different. You can't do equally. You have to see how we are getting the benefit. As I said, in the first year 10 lakh benefit, in the second year 8 lakh benefit, in the third year 6 lakh benefit, in the fourth year 4 lakh benefit, and in the fifth year 2 lakh benefit. So in this ratio only we will distribute. Is that clear? This is what we are going to do. See here, it's really simple. Year end, first year end, second year end, third year end, fourth year end, fifth year end. Yeah, that same format, that presentation table only. But now when you will take this, debenture outstanding before redemption, you will take this like how over there you took. See, in that example, let me just show you. In the first scenario example, every year you had the same, face value of debentures in your balance sheet. But here it's not like that. Debenture outstanding before redemption 10 lakh, 8 lakh, 6 lakh, 4 lakh, 2 lakh, isn't it? This is the thing. So this ratio you will create, yeah, on the basis of this only you will create the ratio. You will cut off all the zeros and you will simplify and you will take the ratio. On that ratio you have to take, yeah. See, it's really simple, yeah. 5 4 3 2 1. How is it 5 4 3 2 1? I have cut off all the zeros and then 2 5s are 10, 2 4s are 8, 2 3s are 6, 2 2s are 4, 2 1s are 2. 5 4 3 2 1. So in this ratio now we are going to distribute. Okay, what are we going to distribute? We are going to distribute the discount. Let's just say discount is 40,000. So what are we going to do? See, 40,000 discount is there. This is the ratio in which we have to distribute into 5 divide by what? Divide by the total of that, isn't it? That's what we do, right? 5 plus 4 plus 3 plus 2 plus 1, that's equal to 15. That's equal to 15. So divide by 15. That's equal to 13,333.333. This is the amount we are going to write off in the first year. In this first year, at the end of first year, this is the amount we have to write off. In the second year, how much we are going to write off? In the second year, 40,000 into 4 divided by 15. Okay, see, 4, right? So 4 divided by 15, that's what we are going to do. That's equal to 10,666.6667. Is it clear? This is how you have to do it. Fine. Now let's just see a problem and then you will be perfectly clear with this. Okay, it's really simple. All we do is we just take a ratio of the debenture outstanding before redemption. Okay, I could have directly told you like this, just take a ratio of this debenture outstanding before redemption, but that's not the thing. That's just the instruction. The logic is what? The logic is how we are getting the benefit. Companies using this money, right? In the first year they had 10 lakh to use. That's the benefit they could take over there, right? In the second year they had 8 lakh money. Yeah. Of course, it will not be exactly 8 lakh because it may be issued at discount, but the face value is 8 lakh only, right? So it's based on the face value, this calculation. In the third year 6 lakh, fourth year 4 lakh, and the fifth year 2 lakh. Okay, how benefit is being derived to the company on the basis of that only. Is that clear? Right? So that's how you do it, right? So now let's just see this problem. See here, let me just show you. See the problem. HDC Limited, yeah, the same name is there, illustration 12. Okay, this is our 14th problem. Now see here, HDC Limited issues 2 lakh 12% debentures of rupees 10 each. This is the face value. This is the total number of debentures at rupees 9.40. Okay, this is the issue price. How much discount is being given over here? 10 rupees minus 9.40, that is 0.60 discount. Okay, can we calculate the discount immediately? Yes, see here, discount on issue of debentures, 2 lakh number of debentures into 0.60, that's equal to 1,20,000 rupees. This is the total discount that we have to write off. Is it clear? Simple and straightforward. You understood that. Now see, under the terms of issue, okay, this issue happened on 1st January 2022. Okay, right. Under the terms of issue, 1/5 of the debentures are annually redeemable by drawings. Okay, 1/5. 1/5 means how much? 1/5 means 20%, isn't it? Yes. So let's just do the calculation. See here, how much face value in total? 2 lakh, total number of debentures, face value is rupees 10. That's equal to how much? That's equal to 20 lakhs. Okay, 20 lakhs is the total face value. How much are we going to redeem every year? How much debentures we are going to redeem? How much face value? I mean, face value is into 1 divided by 5. That's equal to 4 lakh debentures. Every year we are going to redeem at the end of every year. That's what they are saying. Understand? I'm not talking about the discount. I'm talking about the redemption. 1/5 of the debentures are annually redeemable by drawings. By drawings means, you know, they will take out chits. Okay, they will take out chits and whoever names comes, you know, they will redeem those debentures. That's the thing. Okay, fine. The first redemption occurring on 31st December 2022. Okay, at the end of first year, 31st December, they are doing the redemption, and then every year the same thing. Okay, calculate the amount of discount to be written off from 2022 to 2026. All right. So let's just break this question in a diagram. See here, in the diagram, if we see, this is how it will look. Debentures have been issued of 20 lakh. Yeah, 2 lakh into 10, that's the face value, isn't it? Then 2022, 23, 24, 25, 26, total 5 years are there. Is it clear? Yes. And then what happened? See, they told us on December 31st, 2022, we have redeemed 4 lakh face value of debentures. 20 minus 4, that's 16 lakh remaining. 16 lakh face value of debentures are outstanding on our balance sheet. That means it exists on our balance sheet at the year end. Is that clear? You know the calculation. Then again 4 lakh redemption, again 4 lakh redemption, again 4 lakh redemption, again 4 lakh redemption. That's what has happened. 4 plus 4 plus 4 plus 4 plus 4, all 20 lakh has been repaid back like that. So after the redemption, what is happening is you have to see how much is outstanding. Yeah, 16 minus 4, that's 12 lakh outstanding. 12 minus 4, that's 8 lakh outstanding. 8 lakh minus 4, that's 4 lakh outstanding. Finally, at the end, what happens? 4 lakh outstanding minus 4 lakh, 0. Nothing else outstanding. All, debentures have been redeemed. Is that clear? Now, what do we do when we have got this type of question where we have multiple redemption happening, right? Here we don't have 2 points. Here we have this case. Yeah, debentures are redeemable at different dates. So in this case, all we do is we simply take the ratio of the benefit derived. You have to understand this logically. Okay, in the first year, the company had 20 lakh face value of debentures, yeah, to invest or whatever that money they had, isn't it? In the second year, they had 16 lakh, right? They didn't have 20 lakh, they had only 16 lakh because 4 lakh has been redeemed. 20 minus 4, 16 lakh only they had. In the third year, 12 lakh they had. In the fourth year, 8 lakh. In the fifth year, 4 lakh they had. Yeah, it's like that. So in this ratio, in which ratio? In this ratio, 20, 16, 12, 8, 4. In this ratio, we have to distribute. Okay, let's just see how the ratio calculation will happen. First, let's just talk about ratio calculation because that's very important. See, it's really simple. Ratio of the benefit derived. How the company has taken the benefit, right? 20 lakh, then 16 lakh, then 12 lakh, then 8 lakh, then 4 lakh. Isn't it? That's what happened. So cut off all the zeros, 5 zeros cut, 5 zeros cut, yeah, from everywhere. So 20 is to 16 is to 12 is to 18 is to 8 is to 4, right? Then, 4 5s are 20, 4 4s are 16, 4 3s are 12, 4 2s are 8, 4 1s are 4. You just have to simplify. So you got 5 is to 4 is to 3 is to 2 is to 1. Is it clear? This is the ratio you will use. The same presentation, same thing. Okay, see here, let's just see the solution now. At the year end, so what you will write in the year end? 2022, 23, 24, 25, 26, right? 5 years they said. Simple. All right. Now you have to take debentures outstanding before redemption. Understand, this is very important. Before redemption, don't take like this. See, some people take it like this. They say 16 lakh, 12 lakh, 8 lakh, 4 lakh, 0. No. This is not how you have to do it. You have to take before redemption. See, before the redemption, when redemption happened here, 4 lakh. Before the redemption, how much was outstanding in the first year? 20 lakh was outstanding, isn't it? See, 20 lakh was outstanding. And then in the second year, in 2023, how much was outstanding? In 2023, before redemption, 16 lakh was outstanding. Do you understand? In the third year, 2024, how much was outstanding before redemption? Redemption happened over here, 31st December 2024. Before that, 12 lakh was outstanding, 12 lakh, and then 8 lakh, and then the 4 lakh. Okay, same way you have to take. Is it clear? Simple. So this is the ratio. Okay, in this ratio only you have to distribute. So ratio is really simple. I just showed you the calculation. 5 4 3 2 1. That's 15. Okay. Now understand, why do we call this as sum of digits? What is this sum of digits? Sum of digits means, see, actually this is not sum of digits method only. Okay, because sum of digits method will not be applicable. It will be applicable over here. I mean, see, let me just tell you what is sum of digits method. Sum of digits method means we count the number of years. 1 2 3 4 5. 5 years. We just write it in reverse. 5 4 3 2 1, and then we make a sum of these numbers, sum of these digits. 5 plus 4 plus 3 plus 2 plus 1, that's equal to 15. This is called as sum of digits method. And then we use this ratio to distribute the discount. Okay, that's what we do. But understand, this is a shortcut, and this shortcut will only be applicable when redemption is happening equally. 4 lakh, 4 lakh, 4 lakh, 4 lakh. If it is happening equally, then only you will get correct answers. Otherwise, for example, let's just say 2 lakh, 3 lakh, 4 lakh, 3 lakh, something like that is there. Unequal installments are there. If unequal redemption are there, then this sum of digits method will not work. What sum of digits method? Sum of digits method means just seeing the number of years, writing in reverse 5, 4, 3, 2, 1. Let's just say 6 years are there, 6, 5, 4, 3, 2, 1, and then just making a sum of that and taking out the ratio. This thing will not work. Okay, when you have unequal installments, this is how you have to do. You have to see how the benefit has been derived. That is, debenture outstanding, you have to take 20 lakh, 16 lakh ratio based on this. Okay, not like this, a reverse of years and just making a sum. No. Is that clear? Okay. So sum of digits method is a shortcut and it will not work every time. You have to see this only, ratio of the benefit derived. Okay, debentures outstanding before redemption, take a ratio of that and use that. Okay, right. So that's the thing. Now how you will use it, you all know it's really simple. See here, 5 divided by 15. Yeah, that's a ratio thing, isn't it? When we take 5 and then in denominator we take a sum of all the things, right? Yeah. So 5 divided by 15 into 1,20,000, isn't it? 1,20,000 was our total discount. We calculated over here. So 1,20,000 into 5 divided by 15, right? So that's equal to 40,000. In the first year, 40,000 will be taken to statement of profit and loss. It will be written off. Okay, and then in the next year, see, it's really simple. 4 divided by 15. Okay, that's 32,000, right? And then 3 divided by 15. That's equal to 24,000. So that's how you have to do it. In the fourth year, it's 2 divided by 15. That's 16,000. And then in the last year, in the fifth year, that is 1 divided by 15. That's equal to 8,000. Is it clear? This is how you have to do it. Fine. So see, in total, all 1,20,000 in 5 years has been written off by taking to statement of profit and loss. Is it clear? Simple and straightforward. This is how you have to do it. Okay, it was very easy. I just had to explain you the whole concept and the logic. The logic is very important for me. Okay, I hope you have understood. And for BCom and class 12 student, it's really simple. You don't have to do all this calculation and everything. Just simply use securities premium first and then statement of profit and loss. And the entire, in this question we had how much? 1,20,000, right? 1,20,000. So this entire 1,20,000 class 12 students can take it over here. Okay, let's just say you had 10,000 of securities premium, 10,000 you will debit securities premium because it is allowed, okay, to use securities premium, and then statement of profit and loss for the remaining 1,10,000. That's how you will do it. Fine. Okay, so that's all for this video. I hope you have understood this. See you in the next video. Bye.